Greetings. Our story for today is that Vanguard uses Tesla to bury the money management competition when it comes to the S&P 500. And the way they do that is actually by using bots to manage their S&P 500 fund versus active management. So the active managers are now in what we call a long squeeze. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support makes all the difference in the world, is greatly appreciated. And we look forward to your continued support and the ability to put on our show with your assist. We also want to note that we do some trade consulting, and if you need some help with portfolio management tips, you can drop us a note, and we actually do some consulting in that space as well. So there's a new term. I also wanted to note, we're not having ads right now because I believe our account has been hacked, and the folks at Google won't allow us to put ads on our show. So we'd greatly appreciate it if you take time to show some support, maybe one-time support on Patreon would be greatly appreciated. And if that doesn't work, drop us a note. We have other, we have Cash App and other methods that could be used. So what I wanted to review first of all is that in the space of the S&P and under indices, there's something called active management and non-active management. I guess you could call it passive management. So the general idea came from the fact that, I believe, but there's other origins. So about 20 years ago, maybe 25, there was an event that occurred called the blind monkey problem. And so what the test was, and it was listed in the Wall Street Journal, you can look it up. What they did was they took a monkey and they gave the monkey darts. And the monkey threw the darts at the stock pages of the Wall Street Journal. And so I think there were 10 companies, maybe more, maybe less. But what they did was they took a name of all those companies and basically created a shadow portfolio of those companies. The companies selected by that monkey beat out 90% of the active managers in terms of money management. So it brought up the question to a lot of people, well, wait a second, if your management that's active and we pay extra fees for it is so good, how come a monkey could beat you at how and where to invest these funds? And so based somewhat on this, but on other variables, one of the things that came up was that Vanguard came up with a technique where they pretty much got rid of most, if not all, of the managers that managed their funds. And what they instead did was use robots to make sure that the stocks in their portfolio on a constant basis are being updated to ensure that they comply with what the S&P is. So that means, for example, so there's something called weightings. So each of the companies in the S&P, depending on their size, is weighted into the S&P. So if you're doing your active management by, or your management by computer, what you're simply doing is saying, for example, I think the number is 1.5% Tesla represents of the S&P, maybe it's 2%, something like that. So what happens is that as Tesla's stock price rises, the percentage of the S&P that Tesla represent has to be modified to reflect that weighting. Well, there are many ways you can do this, and the S&P has become sort of the largest, I believe, index that controls where money is placed. So basically what we have happening now is that the folks at Vanguard are like, hey, our computers are just going to buy and sell to do proper weighting, but they're not telling, do they do it daily, weekly, whatever. But by the end of the quarter, they have to be compliant to it. So what actually happens then is that the computers of Vanguard and other entities that are managing this way don't do a lot of research or anything. They simply make sure that they update their shares that they own and make sure it's weighted properly against the S&P. So what somewhat happened with them, and then is we're going to see another round of this happen, is basically companies the size of Tesla do not usually accelerate in value as quickly as they have. But in the case of Tesla, it has, and what this created is there's kind of a split. On one hand, as you noticed, as the stock price of Tesla was rising, it kept rising until Elon introduced his comment that slowed down the train. Now, I think that, there's some cooler heads prevailing where all you do is you say, oh, okay, the analysts are saying this thing's going to 1,300 approximately, and as it closes it on 1,300, we're fine. They didn't say how long that would take. What then started happening is people were buying the shares, and the shares are rising. Well, I really think most of the people that were short the stock have exited, and a lot of the hedge funds have actually gone on the long side or assumed Tesla's price would rise. So what we had happen here was, as Tesla rose, particularly dramatically, like 100 points, guess what happened? The auto robot entities just went ahead and kept buying. So usually in a short squeeze, what happens is that there are certain managers that are required to buy in order to close out their positions. And so what you'll see happen is a sudden spike up. After all the managers are bought out of their position, you go to the back end of that down. And so as you saw, particularly as the announcement came on Hertz, the stock price kept surging. And what this is about is that for the bots, once their a certain percentage out of balance, they simply automatically start buying until they can get buying Tesla and selling others to get the balance right based on the weighting of Tesla within the S&P. So this is a fairly simple process if you just work with a computer, and you could see how the stock kept rising into the territory it basically is now. So there's another sector, and that sector is called active managers. So the question is, the reason why active managers get paid, and they typically are offering 1 or 2 basis points or 1 or 2% better performance than the S&P, is because of all the work they do. And so there's this open question right now. Will Tesla's stock price fall backwards so that all these managers that are not S&P compliant but will be required to be there within the next month or so? I believe it's the rebalancing that happens at the end of the quarter. But in general, there's this problem, which is for the bots, they were buying immediately and they're part of the run-up of the stock. For the active managers, they were saying, hey, I saw the run-up. Obviously, it's good in general. The numbers make sense, but it does seem excessive. So those managers have a choice. They can, A, immediately do what the bots do, which is to add shares and force the stock price even further up as they swap out their portfolio to fit Tesla in, or B, wait it out, hopefully Tesla falls, and now they can acquire shares at a lower price and, in essence, add Tesla shares to their portfolio at lower prices than the bots were adding, and therefore getting a better return. So, obviously, I hope you understand what was said. Feel free to drop notes below if you didn't. So now we're in a really interesting period. What if Tesla stock price drops? The active managers win. What's been happening over the last 2 weeks because of the speed of the updraft of Tesla is we're breaking new territory. What that territory is what if Tesla goes up but doesn't give back a decent percentage of that gain, allowing those managers to get in comfortably by the end of the period before they're required to demonstrate that they're S&P compliant? Well, the answer to this is we don't know. If it does fall, clearly they'll be back in as a way. So, they'll be buying the dips in order to get compliant. But there's entirely this problem that could pop up, and I think it's highly likely. Like, I think we're in the 70% zone, where what happens is that the stock does not fall a lot. The active managers that have to get in by mandate of the S&P are stuck buying. And as soon as they start buying in large quantities, they're going to force the price up and the percentage of the S&P up. And now you have all the robots saying, hey, the stock has been brought up and it's a higher price, so we've got to buy more from the robot sense. And as that's rising, you could now have a squeeze upward, forcing the large managers into what I call a long squeeze. So there's a new term that I want to introduce you to, and it's called a long squeeze. In the case of a short squeeze, those guys have to buy to close out the position. In the case of a long squeeze, those guys have to buy to be S&P compliant. And so, and one of the other problems with Tesla, with how the price is moving, is that there's something called the NASDAQ 100. Obviously, there's S&P, there's big cap growth. There are all of these very large indices that Tesla is a part of. So you can kind of multiply the number of people that have to participate in this back and forth on Tesla's stock price, which is, I believe, how we got to this price. And I think as we're closing out, if the price does not fall 10, 15% to allow the active managers to get in comfortably, they are inadvertently going to start forcing the price up, and their acquisition of shares is going to force the bots into action. And so we're going to have this back and forth again. And I think that it's not out of the question for us to head into the $1,300 to $1,400 a share zone as this occurs. And then there are a lot of folks in our camp, or folks we talk to, that are saying that, the split's going to be announced in the next couple of months. And when that happens, note the last time we did this, the split was announced around $1,400, and by the time the split occurred, the stock was at $2,400 a share. So this is another sort of behind the scenes, what could occur here in terms of the long squeeze. Forget the shorts, because they've in general pulled out or sold out, and there's a small number of them. Therefore, they wouldn't push the stock a lot as they close out. But in the case of the long squeeze, I believe that's why the stock price rose dramatically. So we actually have one of our viewers that was on my case about the fact that that was not a short squeeze. And the answer to that is the action of the stock looks a lot like a short squeeze, except for instead of it falling immediately after they close out, the stock price actually stays up in a long squeeze, and those folks can be squeezed further over time. So I think this whole situation is fascinating, because I think there's the potential for Tesla to exceed, I want to say, the intrinsic value, so the value you would naturally get from adding, multiplying earnings times growth rate to get the stock price. So I just think there's an open question: will the stock price fall back as Tesla eclipses what's appropriate for its growth rate? I'd say that's entirely possible, but one of the problems with that thesis is that if the people who now hold shares are forced to maintain their compliance in the S&P, unless the market dips dramatically, I think you're going to end up with this situation where add in a gigafactory or two coming aboard to allow them to increase production, and you basically have another catalyst, not unlike how Reddit pushed up, with GameStop, et cetera. You could have Tesla really make a run for the moon in this process. So I would say that, the other thing I wanted to note is that there are different types of channels that you view on YouTube, and we like to bring in sort of the financial side of the house, because I've got a lot of experience at Fisher Investments as well as Franklin Templeton to base some of the analysis that we do. But I mention this because for a smaller channel, you can't just say, I drove this car today, aren't you happy? You have to do more work, And I believe that you have to use your brain a little bit to figure all this out, to get to ideas and conclusions that are worthwhile for viewers, which is what the case is today. So I'm very much looking forward to your response on this as we get a better command of when we're going to see massive spikes related to the active managers closing closing out their positions by getting S&P compliant, which means buying more Tesla, and when they have to do it by, et cetera, are the kind of detail points that I think will really make a difference profitability-wise to your portfolio. So we look forward to presenting more on this, as well as getting your feedback. And so remember, there can be a long squeeze, because if you're an active manager and you're not in, and you have a certain time frame within which you have to be compliant, it can get very expensive. And I argued that the folks like John Bogle are winning out, because when the bots automatically buy and they don't think about it like the managers do, it's highly likely that there are managers, if the price does not pull back, that'll enter at a non-opportune price and therefore get lower returns than the computers are getting. And when they do that, they tend to lose investors in their portfolios. So, some things to think about for the day. At any rate, just to recall, we didn't put ads in because I believe our account got hacked at Google. We'd appreciate your supporting the channel on Patreon, or we have other methods in lieu of us having ads. We appreciate your viewership and support, and liking and subscribing. Remember, we have some SpaceX shares if there's interest. Our next period is again, entering our health tips space. So I wanted to, for today's health tip, there's actually a professor at UCLA who specializes in Alzheimer, and he recommends that you do a certain test in your 40s, 50s, 60s to make sure that if you have the onset of Alzheimer's, there are mitigating methods that you can use that are low or no cost that you might want to consider. So we'll provide more information on this, but I just wanted to mention this to you again. We've mentioned it before, and we'll cycle it in every 30 days or so for new viewers to be aware of this test available, and the fact that it'd be a real nice enhancement to overall life to be able to anticipate this issue and manage it. Any rate, this is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitro, Hebrew, Choda Hafez, Farsi, Zdravstvuyte, Russian, hello, das vidanya, goodbye, Ni hao ma, Chinese, namaste, Hindi, hey do, Swedish, arrivederci, Italiano, and obviously there's a lot more languages out there that we could throw in, but we appreciate your indulgence. Have a great day. Bye for now. We look forward to your comments. Thanks again. Have a great day. Bye for now.